All right, so for the last couple of years, it really felt like the world of fintech was playing defense, right? Cutting costs, hunkering down, just trying to weather the storm. Well, something's changing. Today, we're going to look at what's happening now, fintech's new offense. It's a huge strategic shift. Okay, let's get into it.
And let's be clear, the cautious, defensive era, it's over. We're not talking about tiny, incremental changes anymore. As one analyst put it so well, this is not cost-cutting fintech. This is something much bigger, much bolder.
And that is the ambition driving this whole thing. The goal isn't just about surviving the next quarter. Nope, it's about building permanent, lasting financial infrastructure. These companies are sending a clear signal. They're not just here to disrupt the game anymore, they're here to build the whole stadium.
So what does this new game plan actually look like on the ground? We're going to break down the strategies of three key players, Chime, Upstart, and Sezzle. Now, each one has a really unique approach, but you're going to see they all share one powerful underlying goal.
First up, let's talk about Chime. Their strategy is all about one thing: credibility. I mean, they've already got millions of users, that's a given. But now they're making a massive play to become a truly trusted household name on the same level as the biggest banks in the country.
Okay, so let's get specific. What's the move? Chime just signed on as an official sponsor of Major League Soccer. Now, you might be asking, why MLS? Well, for one, it's the fastest-growing league in the US, and its audience, it's young, diverse, and mobile-first. That's Chime's sweet spot. But the real strategy here is straight out of the big bank playbook. You put your name on a national institution to signal to everyone that you are permanent, stable, and trustworthy.
And this move is all about engineering a mental shift in all of us. A sponsorship like this is designed to move Chime from that left column in your mind to the right one. They don't want to be a fintech experiment, just some secondary app you use on the side. They want to be seen as essential financial infrastructure, your primary bank. This is a huge play for long-term relevance.
So here's the bottom line. Chime is spending big, not just on ads, but on brand equity. They're buying the kind of institutional trust that turns a popular app into a bedrock financial institution you can count on for years.
All right, now let's switch gears to our second company, Upstart. Their new offensive is totally different. It isn't about brand, it's about fundamentally changing the entire business model for credit itself. They're actually turning it into a service. So meet their new product, Cashline. It's pretty simple, really. You get access to about $500 whenever you need it. But here's the real innovation. It's in the cost. Instead of some one-time fee or high interest on a loan, you pay a flat $10 monthly subscription fee. And that changes the whole dynamic. Think about it. The old model over on the left is reactive. You only apply for a loan when you're in a crisis, right? But Upstart's model on the right is proactive. For a small monthly fee, you get peace of mind, this ongoing access to cash. And for the business, well, this means shifting away from unpredictable cyclical revenue to a stable, recurring, predictable subscription base. It's a game changer.
And that's the key takeaway here. By turning credit into a subscription, Upstart is embedding itself directly into a customer's monthly financial planning. It's no longer just a lender you call in an emergency, it's a service you maintain for stability, just like Netflix or Spotify.
Okay, our final case study might be the most surprising one of all. Sezzle, you probably know them for their buy now, pay later services, is making a move that honestly seems like it's coming way out of left field. They are looking far, far beyond the checkout button.
Yeah, you heard that right. A company that helps you finance a new pair of shoes is now getting into the telecommunications business. I know it sounds completely random, but when you look at the strategy behind it, it makes perfect sense. See, this is actually a classic fintech expansion playbook. You start with a wedge, something to get into the customer's wallet. In Sezzle's case, it was payments. From there, you expand into related financial services. But the final step, the masterstroke, is layering on essential lifestyle services, like a phone plan, to make yourself truly indispensable. But why a phone plan specifically? Well, look at all the benefits. It's an essential utility that people have to pay for every single month, which creates a super reliable, recurring revenue stream. Plus, unlike their main business, it's not tied to the ups and downs of retail spending. But most importantly, it gives customers a reason to open the Sezzle app every single day, which dramatically deepens that relationship. So the takeaway for Sezzle is crystal clear. This isn't just about launching some new product.
It's about diversifying into the kind of essential recurring revenue that transforms a company from just a shopping tool into a core consumer platform.
So we've seen 3 very different moves from 3 very different companies. Let's pull it all together now and look at the big picture, what we can call the Great Embedding.
Let's just quickly recap. You've got Chime using a huge sports sponsorship to build institutional trust. You've got Upstart using a subscription model to create predictable, recurring revenue. And you've got Sezzle launching a phone plan to become an absolutely essential service.
The moves are different, sure, but the goal is identical. This entire new offensive is about one thing: embedding fintech so deeply into the infrastructure of our daily lives, our banking, our credit, our utilities, that it becomes invisible, essential, and, most importantly, permanent.
And all of this leaves us with one final, really crucial question. As these services become more integrated and more essential, the lines start to blur. It's not just a bank or a lender or a payments app anymore. So as this trend picks up speed, it's worth asking yourself, who truly owns your financial life?